Today, Bitcoin soars above the key $30,000 level. The SEC is hiring for its crypto enforcement team. And Joshua Frank of The Tide discusses Ethereum's Shanghai upgrade ahead of its expected launch. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Crypto prices in the green today, with Bitcoin climbing above $30,000 for the first time since June. As of noon Eastern, the cryptocurrency traded at around $30,200, ahead of key inflation data set to be released tomorrow. Ether also rose, trading above $1,900, and the Matic token traded at $1.13. Okay, let's talk about the top stories. The SEC's crypto crime department is on the lookout for 3 new legal hires, a potential sign the agency is trying to increase its crackdown of the industry through more enforcement action. Check out this tweet from the SEC posted yesterday afternoon, which notes that the Division of Enforcement for the agency's crypto and cyber unit is looking to hire general attorneys in New York, San Francisco, and Washington, D.C. According to the job posting linked to the tweet, one of the responsibilities of the new hire would be conducting complex investigations involving crypto asset securities and cyber issues. The effort to hire comes after several crypto-related enforcement actions in recent months. In May, CNBC reported that the SEC nearly doubled staff of its crypto unit in an effort to crack down on abuses in the market, increasing the team to 50, which include attorneys and fraud analysts. According to Cornerstone Research, by the end of last year, digital asset market participants were forced to pay a total of more than $2.6 billion in fines, with the agency bringing 30 crypto-related enforcement actions against 79 people in 2022. Now, we reached out to the SEC but did not immediately hear back. Next, Tyler and Cameron Winklevoss are trying to help their crypto exchange by injecting cash into Gemini, which has been struggling amid the downturn. Citing people familiar with the situation, Bloomberg reported yesterday that the twins made a $100 million loan to their crypto platform recently. The sources reportedly said that the move came after Gemini had tried to get funding from outside investors in recent months. But those efforts were unsuccessful. It's interesting to note that the figure is the amount that Gemini agreed to give to some of its customers as part of that Genesis bankruptcy case. In the wake of the FTX collapse, Genesis froze withdrawals, which locked up funds for customers of Gemini's Earn Yield product. We reached out to Gemini for comment and confirmation, but as of noon Eastern, we hadn't heard back. Last, hackers just stole millions from South Korean crypto exchange GDAC. According to the exchange, roughly $14 million in Bitcoin, Ether, WeMix token, and Tether were transferred from the exchange into an unknown wallet. That transfer happened on Sunday and accounts for about a quarter of GDAC's custodied assets. In response to the hack, the exchange halted both deposits and withdrawals and announced that it's working with token issuers to freeze assets as well as police. All right, on to our main story. Ethereum's next big upgrade, Shanghai, is set to launch tomorrow and will unlock more than $30 billion of Ether. I spoke with Joshua Frank, the CEO of The Tide, to find out what can be expected once that happens. So in the last 24 hours, you've seen this huge price run up with Bitcoin, Ether, Solana's up 10%. What are you looking at in terms of what's driving this momentum upward?
Yeah, so I think it's a lot of different things, and I think the answer is slightly unclear. I think one of the things to note, which people aren't really paying attention to, is actually movement in Korea. So Solana specifically, we actually saw double the volume of Solana on Upbit against the Korean won pair than we saw versus the US dollar on Coinbase, and almost the same or maybe triple that versus what we saw on Binance. So what we've been seeing actually, it's not just the last day, but it's been the last few weeks. We saw actually the same thing with the Dogecoin rally. A tremendous percentage of that buying activity was actually, even though it started on US hours, it was sustained on Korean hours. And so that's a really interesting trend that we're seeing across a number of different coins. If you look at what are the tokens that actually outperformed Bitcoin over the last 24 hours, there are very few tokens that did that. But Solana is one of them. Another one is Stacks. And Stacks also saw a lot of their volume come out of Korea, which is quite interesting. So it seems like it's retail investors in Korea that are moving into crypto. But I don't think that's a good enough answer in and of itself. I think that explains some of it. I think there are a number of other things happening in the market. The first thing is we're in a very low liquidity regime, which means that small things can actually have a very significant impact on price, right? It doesn't take as much volume to move price up, but on the same vein, it doesn't take that much volume to move price down. So that's something to be aware of in the coming weeks as well. The other things are, but I think we're waiting to see what happens in terms of inflation numbers. There's a question of, is the market pricing in the Fed not raising rates, which the Fed is giving clear guidance that they are going to raise rates. And there are a number of other things which I'm happy to get into that I think might be moving the market as well.
I mean, to your point about the shallow liquidity in the market, yes, that means you can have outsized price swings. And at the moment, that's, in Bitcoin's favor, it's moving the price up. But ultimately, you're seeing all of these on and off ramps between US dollars and crypto being closed. A lot of crypto firms have expressed concern at the fact that they don't have an established banking partner. And at the end of the day, like, if you want to support or even boost up these crypto prices, it is dependent upon this ever increasing flow of US dollars into the ecosystem. So, I mean, what are the long-term effects that we're looking at here as a response to this shallow liquidity problem?
Yeah, look, I think that's an important point to bring up. I think there's certainly impact from that, but keep in mind, I mentioned a lot of the volume was coming from Korea, so there are other countries that can move crypto and that can move prices up. We have seen, for what it's worth, Tether's supply is almost near an all-time high, so there is additional minting of stable coins that is happening, but certainly not having access to banking for crypto companies in the United States is a massive problem. And that is going to be a problem that is hopefully solved over time. I've heard scenarios of firms in crypto actually flying to Texas to open bank accounts, because they're like, if any state is not going to care about US banking regulation, is going to say, hey, we'll bank crypto, it's probably Texas. Hearing about people going to regional banks in rural Pennsylvania and upstate New York to try to open bank accounts. So it is very much a mess. But I think the thing to note is that the market is opening up in Asia, which I think is going to be driving some of the volumes. It's not just specifically within Korea, but also Hong Kong. The government in Hong Kong has at least temporarily brought forth a very pro crypto regime. They've allowed multiple exchanges to have licenses within Hong Kong, which I think is really important to note. So that, I think, is also moving the market. But I think the other piece which people are missing as part of the low liquidity issue is the lack of lending. If you're a market maker, you can't borrow, really. It's very difficult to borrow. There are a very low number of lenders, which means there's a lot less leverage in the system right now, which also is pushing up volume. So I was speaking to a large market maker the other day that has said that while their market share has actually increased, their volume has gone down by about 75%, which just speaks to the environment that we're kind of in these days at this point in time.
Meanwhile, we have this huge upgrade for Ethereum tomorrow. There is this concern that now that withdrawals will be enabled, it'll mean Ether tokens flooding the ecosystem. That flood of supply could be a headwind for price. What's your read on what to expect tomorrow?
Yeah, so there's actually two things that are happening. And so there is what's called partial withdrawals of Ethereum as part of a part of the upgrade, but there's also full withdrawals. So the way that partial withdrawals works is basically, to stake ETH, you need to provide 32 Ethereum. Anything above that is your staking rewards that you're going to receive. And over the last year or so, those staking rewards have been accruing. What's going to happen is, once withdrawals happen, you will see partial withdrawals open first, and any rewards above those 32 are going to be given to the ETH stakers. So your next question is, well, how many rewards is that? So on average, the average validator has about 34 ETH, so about 2 more ETH than the 32 required to stake, which is all going to automatically, it's not a manual process, automatically be sent to those Ethereum stakers. So there are about 565,000 validators that have 32 ETH, and the current price is about $1,900. And so, quick math, you're looking at about $2 billion that is going to be immediately available to be sold. And that, for reference, that's going to happen over around 5 days. And if you compare that to the average trading volume of Ethereum, on Binance, for reference, you're looking at about $1.5 billion a day on a single exchange. So it's not crazy. You're looking at about $400 million a day over the course of about 5 days, which is a percentage or a fraction of all of the ETH that is sold. Keep in mind, obviously, that's not all going to be sold. Some people probably forgot they staked ETH. Maybe you staked ETH in Coinbase and you're leaving it there. You're not even thinking about it. But the kind of bigger concern is that full unstaking, right? Well, what happens when people can actually fully withdraw those 32 Ethereum? Because that's a lot more than the 2. right? And so the way that that process is actually going to work is it is going to be a much more extended process over time. And the way that it basically works is that depending on the number of validators that are staking ETH, there is a very big difference in the amount of Ethereum that can be withdrawn over time. So basically, Ethereum wants to make sure that the network is secure. So the more that people are withdrawing Ethereum, the less they're going to actually enable those people to withdraw. And so for a very quick reference point, and we can get into a lot more detail if you want, it's going to take about 500 days total if people wanted to withdraw all of that Ethereum. So it can't happen in a day. At minimum, you're looking at about 520 to 550 days. But what we'll likely see at the starting point, if we assume there are a number of people that want to withdraw and sell, about $110 million is going to be withdrawn every day for the first 10 days. And over time, that's going to kind of decrease. And so what are the considerations in terms of what's going to happen to Ethereum's price? Well, the first consideration is, well, is that a lot of Ethereum? Certainly it's a lot, but it's not, this existential amount that I think people are concerned about, right? It's not the billions of dollars, the 30 plus billion that are locked in staking. It's only, $100 million a day. The second thing to consider is there's now going to be a lot of investors that might want to actually stake ETH that weren't staking before.
Okay, that's all for Crypto World today, but we will be back again tomorrow, so we'll see you then.